Hello, everyone. Welcome back to the RationalInvestor.com's recap of our daily brief. Let's try and keep this 10 minutes. I don't want to talk too long today, so we'll just get to it, give you some thoughts, and send you on your way. So to begin with, something that we talked about in the daily brief today, which is kind of jumping out at me, is that, this is the middle of the summer. We have to remember, of course, that the pros are really not participating in the market right now. They're off in the Hamptons. So when we get into these summer silly markets, we can often see sort of anecdotal evidence building for maybe a potential break in the market in the fall. They don't call it the fall for nothing. And I can start to see a lot of anecdotal evidence that's starting to sort of suggest that. And so I wanted to take a bit of time here today and just talk to you a little bit about this. So first and foremost, those people that are interested in Dow theory, really good working example of a Dow theory sell signal in that the teal line here, this sort of bluish teal line, and the stock market itself has broken to new highs. But interestingly enough, you can see the Dow transports in orange here has not broken to new highs. And actually, we've rolled over here today. And you can see we were nowhere near old highs on the transport. So really interesting little piece of anecdotal evidence. Actually, Dow theorists would call this a disconnect, a divergence. There's problems. If we get any sort of sell signals in the stock market, be careful. Things could come down precipitously here. And to that end, off of the shorter time frames, watching things like algos. We did actually get an algo top here off of the 4 hours. You can see the M top. I think we talked about this recently. You can see how the algo went bare. We were at a 127 extension, so it really doesn't surprise me to see the stock market coming off a bit. And I'm kind of thinking, I'll just sort of quickly do this. I'm kind of thinking head and shoulders-y kind of action here. So I wouldn't be surprised if we have to come down into these support levels before we actually start bottoming out. But we'll see. Only time will tell. Really interesting anecdote of algos spitting out signals here and them lining up nicely with market structure and trade location. Sort of moving on, our next sort of thought, and I wanted to just flash that Dow theory idea at you. If we actually look at the broader market, and this is quite shocking, really. The Dow industrials have moved to new highs, and all right, everybody loves the blue chips and all that kind of stuff. But if we actually look at the internals of the market, there's some real disconnects here. And so this image here, this is both the 52-week, new 52-week high, new 52-week lows. And, like to get really good stock market signals, we often like to look at our breadth indicators. And back in the December, January market bottom, you can clearly see this beautiful W and new 52-week high, new 52-week lows. And that led to this spring rally for 2019. If we fast forward to today, you can see that, sell in May and walk away. You can see the top came in, the violent reaction back up top. And now maybe we're setting up for some sort of fall, late summer, early fall top. But long and short of it here, 52-week high, 52-week lows have not been making new highs, and we could potentially M out. And then we look at like the breadth of the market. And the interesting thing with breadth is if we actually look at the Russell 2000 relative to the big caps, you can see the Russell 2000, there is that December, January bottom. And really good anecdote of how, for real stock market bottoms, we have to see sort of broader market participation. And in essence, when the small caps started to outperform, there's that December, January bottom. You can see that, but the W, that led to sort of the spring rally. And you can see that this stock market, yes, the Dow's moving to new highs, but the small cap stocks are just not participating in this market. That's really troublesome. Because, if you want a nice, healthy, expanding economy, growing economy, you want all of the market to be participating. And so this smaller greenish line here, you can see this is the breadth of the market, number of stocks moving up versus number of stocks moving down. And you can see, remember that small cap underperformance forging to new lows. You can see the actual breadth of the market is negative here. Another major warning sign heading down the road. The last sort of piece to this is our old buddy, the VIX index. And what I find really interesting about this is that nobody's talking about the VIX now. And so, as a contrarian, that's actually when we want to be most interested. We have a simple rule that if we ever get down into single digits, then the VIX is a no-brainer buy. And you can see that she very, very rarely ever gets down into single digits. We had an extended period here of low volatility, but you can see the end result of that, kaboom. So we're back down into very low teens. We talked lots in the daily brief here today about how this is starting to look really interesting given seasonality, given the way that we're starting to get internal indicators, Dow theory, breadth of the market, new 52-week high, 52-week low, Russell 2000 underperformance. This actually makes perfect sense that basically the entire market's gone very complacent. And we even suggested, especially for our level 3ers, we'll be covering this in detail next week's class. But we ought to be paying attention to this VIX index and also what are the options on the VIX index doing. Really interesting stuff here. Moving on, obviously with the gold market moving up as egregiously as it has, just heading ahead of this Fed meeting, I'm a little bit concerned that maybe this is a buy the rumor, sell the news. You can see the gold market moving up. You can see the Japanese yen moving up. And then also, too, we can also see crude oil is absolutely falling out of bed. Gold and crude historically usually actually like to move in opposites. So this up move in gold kind of corresponds with the down move in crude. What I'm worried about with gold, though, is that we haven't really broken out here per se. We're just sort of sitting in a range. You can see Algo's not really that interested. And I'm just worried that what we're getting here is sort of a buy the rumor ahead of the Fed announcement. And then maybe on Fed day, that's actually when this thing tops out and we get to sell the news. So we're sort of labeling this as sort of a risk back, those markets that are perceived as sort of fear proxies, they're starting to move up. Japanese yen's moving up, gold's moving up. Bonds have issued a bit of a buy signal. And of course, Bitcoin has caught a bid here overnight. We'll talk a little bit more about that in a minute. But with regard to this summary, we actually took a really good look at the silver market right now. And the tertiary metals aside from gold. And on this chart here, we have gold, we have silver, and we also have the gold-silver ratio. And we were just sort of, musing about this today, that maybe this is the time when silver actually gets to play catch-up. So if we put them away, you can see the silver markets. It's had a pretty nice run here. Please be careful trading silver. We talked about this at length in the daily brief today. Silver boys are notorious crooks. So just be careful. But I think the real message here today to me actually seems like we actually see the gold-silver ratio starting to come back. And I think I mentioned this briefly the other day that, this gold-silver ratio just got a little bit too far too fast. And we're seeing a lot of these sort of derivative metals, platinum, palladium, silver, starting to move up in earnest. And that little M top, I think is a great anecdote of that. So really interesting. We talked lots about that in the daily brief here today as well. I trade ideas within the metal space. I really like this stock. It's a Canadian stock. I think it trades in the States, but I'm not totally positive. Interestingly enough, when we were doing the daily brief, this thing was just breaking out of its bullish bot, but really good example of a nice bot setup. You can see the 25 level here. I didn't take the time to get exact numbers here. This might be just slightly off, but basically about 14 and change on this PDL. Nice trend line breakout. So, I think we can make the argument that this isn't a bad way to play this sort of derivative metal, platinum, palladium. This guy happens to be palladium. He's got a bunch of platinum and stuff in his portfolio. And really good looking example of a bullish bot and how basically I would trade this rally in the metals markets heading into that FOMC announcement. And you can see I'm within a whisker here of just moving my stop to scratch. And if it comes back down to 25, I'll just walk away. No big deal. Full disclosure, I am actually long this name off of the W down here. And, really good looking trade. And also full disclosure too, sometimes these W's just don't hold. And yesterday in the oil patch, we showed you very quickly that oil's fallen apart here. And just for the sake of full disclosure, it's good to have everybody know. And I like to tweet this stuff out just to show you that I'm not just a shill, that, you know, sometimes I take bets in the market and I'm wrong and I get stopped out. So we had a really good example of an oil stock. I bought the reload zone within reload zones kind of idea, the W's, and this trade didn't work and I just walked away from it. So, you know, I'm never right 100% of the time. I'll never bill myself as being right 100% of the time. That's why we trade setups. So here is a good example of buying the W's, how that's worked very, very nicely. And now here we actually have bought continuation trades. So really cool little trade here to show you what we do at TRI on a daily basis. To finish off today's thought, of course, we can't have a talk with you guys without a good conversation about the corn. Interesting I pulled this up on Coinbase today here, and Alex pointed out that this bearish AB equals CD level has not been hit on the cash market for the US customers. It's interesting because, you know, across all of these various, you know, like derivative exchanges, the OKCoin forwards markets, I had beautiful levels come in here. So I'm a little worried that maybe the US markets, kind of like how I showed you recently, Colleen and all the Americans had to really wait for that level to get hit, and finally it did get hit. We might have to come down and swim against these lows on Coinbase, but there's some really cool anecdotal evidence that's sort of suggesting maybe we're closer to a bottom than a top. We've got, of course, trade location, reload zones, right? So that should make sense. And this is also was the previous breakout level. You can see the W, you can see the cool structure there that came in. So it really shouldn't surprise us that this is going to be a bit of a pivot. Also, too, really good example of MACD bullish divergence that's actually confirmed now. And interesting, on this dump to new lows, we actually also did a double divergence. The double divergence, of course, will be confirmed on a move above this level. So that hasn't been confirmed just yet. And of course, good old Thomas on the site, he loves when you get the breakouts through the zero line on the MACD level. I would consider this divergence confirmed. It is working. And actually, this is kind of a fun sort of side conversation we're having on the site. I have much respect for Mr. Bollinger. This is one of his tools with his Bollinger Band study. And really good anecdote that when you see divergences come in on his BB percentage B indicator, there's one there. If you can couple those, and keep in mind, this is a volatility measure. If you can couple these volatility divergences with price momentum tools like the MACD, wow, what a signal. And then on the downside, exact same thing. So we'll just wrap up this this call today with, let's watch closely whether this MACD divergence paints another divergence. You can see that Mr. Bollinger, he's getting small little divergence signals coming in here. So interesting how we have location, we have price momentum divergence, we have volatility momentum divergences trying to come in, and we have a trend line break. But just like we had this trend line break previously, we actually have to see a W come in on the other side of this trend line to actually get bullish. So here we are breaking the trend line again. Now let's see whether we can get some sort of structure to actually frame the trade. So interesting times we're living in the market. Have yourselves a great day, everybody. Be sure to play from a position of strength. All the best, and bye for now.